Alrighty, guys. So yeah, thanks for the wonderful intro, Erika. She's like a godmother in the Korean community. So if you need any support, any caring, you should actually come to Erika, right? So I'm John, CEO at Blitz Labs, and we are the research-backed advisory firm that is focusing on setting up the go-to-market corporate strategy for the companies that want to penetrate the Korean market. Well, to the Asian market overall. And I'll explain why I started with Korean market first, then about the APAC market overall. So I'm with my team. They're a really great team in Korea that you should talk to in terms of the setting up the strategy, product, and in terms of the execution as well. So if you're going around, staying here, you can actually say hi to them as well. They're all back there with me. So yeah, hit them up. So the topic is about market shift in the Korean cryptocurrency market from retail to enterprise. So history, I'm gonna start with the history of how this Korean market started and why many people are so interested about Korea and fanatic about it. So first of all, it used to be just retail-driven market. Think about 17 when kimchi premium was there. So why many people were interested in? Because kimchi premium, K premium, it used to be 50%. 50%, guys. If you just send the token, let's say Bitcoin, to Hong Kong account, and then when you get it back, you can just easily get 50% arbitrage for that. So that's why trading volume by exchange in 2018, Upbit was the first, Bitham was the third. And also the other exchanges like Coin1, Corbit, these major forward exchanges other than these two were actually on the top 10 list. It's because of the retails were interested in getting their money out from Korea. That's why there was a huge kimchi premium there. But also at the same time, around that time, many projects thereby wanted to join in. So to illustrate more about this, it's a little bit hard to actually get Korean won or foreign currency out from Korea. And thereby, it's like a siloed market. It used to be, still now. So thereby, when these foreign projects want to penetrate the Korean market, A, obviously it's because of this huge retail volume, but B, they always needed to be listed on CEX. So that's why this trading volume happened like this. And second, so it used to be like this, but as you guys know, Axie, these kind of GameFi projects, and before that, DeFi started since 20 April. And starting from this compound minting governance token, everything has changed. That's why we are all here now with this fancy place. And it became enterprise-driven market. Why? Because they saw how this X to earn thing happened. So okay, this incentive model quite works well. What should we do? Well, usually bigger companies are well acquainted with this kind of money move. So obviously they are interested in, but what's their kind of barrier? Is obviously the legal, right? So when I was in Coin1, I had a hard time to actually implement any kind of DeFi and CeFi driven services. So I made a partnership with Compound, but unlike Coinbase, when they made 3 to 4% yield per year service with Compound, we couldn't do it. Why? Because of the legal structure there. It was slow. But now, as the new legislation came in, well, a new regime came in, suddenly the overall kind of tailwind changed. So thereby, this current cryptocurrency market is become more like an enterprise-driven market, which is pretty similar with the US market. So if you see, Binance has penetrated with all these game and entertainment companies already. They wanted to lock in the companies. That's why some of the big top three game publishers or entertainment companies already made a partnership. SM Entertainment, YG Entertainment, and Netmarble. Dunamu, Upbit's parent company, they are working on NFT platform with Hive, BTS. Quite obvious reason, with their own chain. Third, so Dunamu is like a tech company, Binance is like a exchange, but from the foreign, overseas. And what about Hashed? It's a VC. And as a crypto VC, it used to be just investing in token deals. But now they made the venture funds to invest in the equity deals. What this means is just like Sweatcoin. It used to be just the retail-focused product on Web 2, but now they're interested in moving on to Web 3. That, in Korea, what they're doing now with the bigger corporates, bigger companies. Naver, SK, LG, they're some of the LPs to their venture funds to invest in equity. Why? Well, there are some back history that I might able be to share if you're interested in. But anyways, they should be, they are listed on the stock exchange. So thereby, they always need to go through heavy audits and the vehicles that properly works. That where Hashed supported a lot. So for example, why I actually made this another slide for illustrating about how Hashed is penetrating the Web 2, it's because now Korean market, it used to be just retail driven, but now it can be A, enterprise driven, and B, it is also about how these Web 2 startups can be Web 3. So they're leading it with, starting from the top down. So to illustrate more on this infographics, so in Web 2, they invest in non-crypto markets. So that can be actually transited from Web 2 to Web 3, where incentive model could work. And also, obviously, they invest in the crypto market, but that is just like the existing model that's been around since their beginning. And from Web 2, they raise joint funds, but also at the same time, they may help, indirectly entering the Web 3 market. So that's why I made this slide, because it is actually the one of the tipping points where the Korean market has changed their stance. Also, as I told you about these Korean companies, they're just like sniffing the smell of money pretty well. So both large and medium to even small-sized enterprises or companies are expanding into crypto. There are two types in terms of size. Conglomerates who are listed on stock exchanges, they're already penetrating the crypto market. So especially SK, tipped to be the Korea's first group to issue digital coins. It was supposed to be Clayton, but they haven't actually shown us any updates yet. But we should see. But at least they actually PR'd. So obviously you have the certain reason why they actually PR'd as a conglomerate. What about the mid-sized and small-sized ones? There's a Seoul trading, Seoul exchange, which helps out making these stocks unlisted to be tokenized. It's slowly starting. Obviously, they are working with the legal part, with the government. It's slowly starting, but it's already happening. Just like FTX, already does with it. They already tested out 2 years ago, 1.5 years ago. But in Korea, it's just starting. Yeah, so as I told you, after DeFi, GameFi, obviously, and it is easy to actually break into all these retail, retail market, because DeFi, it is mostly about whales. Games, it is for retails. Why? Time and money. DeFi was just about money, just like MEV. But what about this? Well, tech as well, but besides of that. But games, you should actually invest your time. That's what made all this difference. And you know that before League of Legends came into Korea in 12, these three big publishers, Nexon, then Marble, NCSoft, used to make a lot of game titles. They actually acquired a lot of companies in the States, just like Jam City from Netmarble. But, things have changed. League of Legends just the top, right? But still, now they actually made the right move. Why? Think about IBM. Think about Microsoft. IBM didn't think about software. And thereby, Microsoft won over in the second phase. Now, it's different. Apple, Facebook, all these app-driven businesses they're doing. What about this? Now they got the point. Okay, this phase we shouldn't lose. That's why we should do the token. Come to us. It is the game by Come to Us, Summoner's War, Lost Centuria, game fan card sales by Come to Us broke records. DAU 200% within 4 weeks. What about raised 1.3 million from the retails, sold out in 3 hours? Simple. Why? Retail market now knows how this token market works. Well, at least a few percent up. But another point is, Mir 4, MMORPG with P2E mechanics developed by Remade. We invested in Snack Club, which is holding Loud GG, all this kind of like game publisher-driven like vehicles. And they're telling us that Mir 4 is crazy. It's so hyped up in Brazil. Why? Obvious reason. But because of that, they broke the records as well. Remix total trade volume and wallets after mid-4, it went up crazy. So concurrent users is 1 million and launched in 170 countries already. And NFT transaction volume is 130K on the launch date. I know this is a little bit bearish market right now, but they already had a pick. Well, I would say, at least in the short term, they already showed the breaking records. So obviously, when after this bearish market in the bullish run, you can already expect how these projects can work out. Just like the projects survived in the winter, and this season made them go. But so Korean GameFi market, in a nutshell, I would say, following the success of Come to Us and Remade, these are the companies that actually are working on token projects. Kakao Games, NeoWiz, Marvel, Krafton, NCSoft, even Nexon, obviously, because Nexon actually has Bitstamp, and they already acquired stock from Corbett, which company you'll see in the Republic and Corbett party maybe in the 2 days later. But anyways, they already most of them already issued, but others they're still testing the water. But obviously they're already working on it. That's why many layer ones and game companies, from the overseas are interested to meet them. So why Korea? Korea is the only market where you can both build and sell, and these components sufficiently present. I would compare with some of the other countries in the APAC market. And first of all, in Taiwan, it divides into 3 aspects: smaller retail market, risk-averse population, and geopolitics. 2 things actually make Korea more kind of like highlighted. It's because retail market, you saw the volume. Risk-averse population. Well, Koreans are relatively not risk-averse. They're quite interested in investing crypto. That actually aligns with why retail market volume was huge. But another good point is geopolitics. So expats from Chinese market, well, some of them are already getting into Taiwan to actually do their business, or already many Taiwanese players are out there. So it's like a haven for Chinese crypto, we can actually say, as a, being like a Asian here. But also at the same time, cultural similarity with West, like Japanese culture, Western culture, it is quite well acculturated there. So it's good market to sell, but not to build. What about Japan? I know many Japanese friends, and I actually have him here as well. But they're really, really, really good at building. Just like Animoca, why they made the subsidiary in Japan? It's because they're really good builders. They're really focusing on one product. But that means it might be relatively hard to sell. So first of all, limited retail. It's because of the whitelist, right? And the second reason actually goes along with the first aspect as well. About limited retail, it's because of the rigid regulation. That's why Liquid Exchange was sold to FTX. Now FTX could do something out in the Japanese market, And also, there's a rumor that FTX wanted to buy out Bitham. Huobi tried to do, Binance tried to do, but I don't know, maybe this time it could be different. But anyways, due to this difficulty to whitelist the tokens on Japanese exchange, total listed coins are only 40, compared to Coinbase, more than 100. What about Korea? More than that. All these pairs. And thereby, total trading volume is relatively lower, and tokens leading the spot trading volumes are different. XRP, XYM, XLM. These are the not trend that we are following up. But still though, as I told you, active development. So that's why many companies are interested in builders there. So that's why Korean market is only equipped with both arms. One to build, one to sell. Then why not China, Hong Kong, and Singapore? I briefly kind of like illustrated there. Of course, there are different dynamics and different vectors that we should consider in, but at least in a nutshell, I'm just presenting it right now. China, the NFT is even banned. Chain news, they're good friends, they're legit, but they had to shut down because of the obvious reason. And that's why it's really hard to do something about crypto in China. What about Hong Kong? Financial center, yes. Also, legal entities, yes. But what about builders? Yeah, we could have some people from Hong Kong, but based in Hong Kong doing something, making as a crypto center, it's a little bit hard. What about Singapore? Yeah, it used to be one of the old, really financial centers, but also equipped with all these crypto companies, yes. But also, but lack of viable builders, and also 3AC blowout, it actually made a huge consequences. Aftermath is still hitting us hard. Well, overall, Celsius, after meltdown, Luna meltdown, right? So that's why compared to Korea, all these kind of countries in APAC region are relatively hard to do something out as region driven. Opportunities in the Korean market. So in recap, it's more like this: strong retail interest, massive potential user base, strong enterprise interests, and lastly, favorable regulatory climate, especially after the new regime. So it's a good market to build and sell, because think about this. As a founder, always it's hard to do both things, product play and crypto play. It's really hard to follow these both aspects. Unless you have really experienced it in different angles, you cannot really imagine what to do, how to do. So that's why Korean market, it can be sort of the, scouter for any kind of projects, companies in crypto space. If they want to see APAC region overall, starting from it, the easiest path will be the Korean market. Starting from there, then trying to decide what to do next. It's like a geopolitics, as I said. So let's fly back to Ethereum. So why I wanted to be here in ETH Seoul is because Ethereum became the ultimate ledger for each and every one of the layer 1s, layer 2s, whatever. Here are the whys. Real euro usage, battle-tested security, and EVM compatibility. That third aspect actually came from these previous two aspects. I'll explain. TVL, DAU, monthly active developers. Look at that yellow. Totally different. It's almost 50%. Oh, it's more than that, 65%. Think about all this consensus mechanism. If it is more than 51%, it's a 51% attack. What about that? 65%. So these developers, they are kind of adding value to that TVL. And it's because of these battle-tested security. Think about the recent hacks. Are you be able to have your 1 trillion, let's say 1 billion USD as a company to have it on other chains? I wouldn't do it. That's why this battle-tested security makes, obvious reason for them to choose Ethereum first. Or later on, at least having their state secured in Ethereum. Extremely resilient security, long history, decentralized, and thereby, if we think about gas fee, we can think of it as a trust premium. Many projects, many layer ones, they're saying that these gas fee is low, that's why it is good. I know, but think about the trilemma that we are always talking about. Obvious reason, fee can be thought as trust premium, although currently like Deng Sharding, whatever, is actually focusing on lowering it down. But ultimately, it's like we are fighting against Fed. Think about that. If they're loading down the gas fee, what will be their advantages? And third is, it's actually the, how do I say, good epitome of why how these two aspects affected the layer one ecosystem. All these chains, they didn't start as EVM. Well, some of them. They started as Ethereum killer. But why they become the EVM compatible chains? Because of these obvious reasons. And also, that's why Ethereum as the go-to chain for the big corps, because of this. Facebook, Polygon, and see about that? No other blockchain network has been better tested as Ethereum. And we're all liking about flipping the thesis, right? So Bitcoin and Ethereum comparison here, Bitcoin market cap, it used to be that huge gap between Ethereum, but now maybe flipping can happen. And security as the minimum requirement. So DApp and DeFi projects will return to Ethereum as a safe haven. So many of the projects were building on other layer ones. After some, technical issues and also some, exploits, they actually decided to, go back to Ethereum and then decide on what to do next. Some of the Clayton-based DApps are also doing that. So if you can see, TVL, it increased 10% since May. So with the implosion of these alternative layer one chains, Ethereum has emerged as the biggest winner, absorbing all this huge amount of TVL. That's why I told you it's become the ultimate ledger. So fundamental market shift from the retail to enterprise. Past, it used to be just mass adoption for retail. So when Ethereum developers projects, they make the killer apps, retail consumers, mass adoption. That's what we had in mind. That's what we had as a theory. But it didn't work out. What about now? Mass adoption for builders and enterprises. Ethereum developers projects going to DApp services, onboarding enterprises, then it goes, it trickles down. So this trickling down effect is quite important. And that actually attracting these builders, and that's why we can have many dev days or dev shops, including the Ethereum Seoul, obviously. So we can expect all this massive boom of crypto in Korea. So private blockchain, we had this hyperledger theory, thesis, and all this kind of private blockchain, right? Enterprise blockchain, but it didn't work out. And it doesn't work out because of these obvious reasons. Why would we use blockchain for that? So it became the public blockchain plus privacy solutions. That's why privacy became a thing. That's why we had a ZK Seoul Meetup, and these privacy is getting important and important. And now this what's it called? Verifiable delayed BDF or these kind of technologies were there, but now it became VDE, which is verifiable delayed encryption. So now we are even talking about these technologies, and obviously these privacy can be soon to be applied to how we actually transact and how we can actually store the data. So this is the current market map of layer ones competing each other in Korea. Ethereum obviously there in terms of x-axis, number of DApps and developers, and y-axis, retail interest and attention. So yeah, there are some notes down there. So I'll explain there. So firstly, Luna meltdown, hashed portfolio companies, many of them actually moved to Polygon. That's why they recently announced a partnership. So obvious reason, Polygon went up. What about Clayton? It started from gas fee policy. It used to be free. But with the validators having some issues, technical issues, but also NFT projects having minting issues. But at the same time, recent rug pulls actually made their ranking go down. Third, Flow. After Sportium, the Korean NBA top shot, they tried to penetrate more and more in the Korean market. Let's say working with the sports and entertainment industry players. What about fourth? Cosmos. So Coin1 is the first exchange that ICO'd Cosmos Atom. And thereby, many J is Korean, so like thereby many Korean retails bought out Atom, good at the cheap price, good price, and they held it, and thereby you can see a lot of good validators here in Korea, mainly focusing on Cosmos ecosystem. I brought in my head of tech, who is also from Coin1. He's a Digeneer of mine, Degen plus engineer. So if you want to say hi, you can actually ask him. He's right over there. And that actually, when I fly back to the privacy side, so that's why Starkware and Alio came to the Korean market as well to promote because of this reason. Because now, yeah, it's going to be about privacy, especially with the enterprises that will be interested in different stuff with privacy. Traditional Korean companies expanding into Web3. Two cases. First is LG, second is SK. So, like SK, one of the subsidiaries of SK actually, bought out Corbett. They not bought out, but they have some shares, majority shares, in Corbett, and they already have Setup wallet and all these kind of services that could be transited to Web3. So that's why I had this as one of the case studies. They even thinking of Metaverse platform Ifland, with the plans to integrate the native cryptocurrency. What about LG? Added objectives, blockchain-based software development and sales, and also cryptocurrency asset trade and brokerage, which means something for the conglomerate. And second is established a R&D center called iLab, and also Drop Gallery, which is also about the blockchain, especially about NFT, just like Samsung TV also decided to integrate NFTs. And lastly, Seoul Auction Blue, to push the NFT business, they actually partnered with. And also, many other big players are currently interested, or at least testing the water now on the Web3. Even many other cases that I can explain, but that we could actually later on talk about it, other than this pitch. One thing yet to be answered. So what do we need for this shift? Okay, now we have in mind, market is changing like this. There are plays like this. Okay, I sorted out whatever in ways. Then what we should do? How should we utilize this? Then we came in. Research, corporate strategy, that's our two main arms that we are doing. But not only the strategy, but also backed by research. But based on that, we do the execution together. When in 19, we built Kepler Wallet. I built Kepler Wallet with Kepler Wallet team currently, Chain Apsis. And that was when we won 2 hackathons, one in Seoul and one in San Francisco. And that's when we met all these, huge players in the Cosmos ecosystem. And also, then we realized that, okay, product market fit is important. Product zeitgeist fit is important. So afterwards, when we built, Everett protocol, which is the liquid staking model for Cosmos, what we thought is we should do more of the research so that we can actually run the business properly in Web3. Not just idea-driven, but also equipped with actual good execution so that we can actually make it as a business. This is all it matters for now. Think about layer ones. Protocol fee is not enough. So that's why we need this kind of different approaches regarding the corporate strategy, but at the same time, in terms of the branding. Because, like, let's say Dgraph or all these other good Ethereum players like Starkware, Alio, they're really, really huge. But it's really hard to translate the language, not English, but more about their thoughts, narrative to be sharply in a should way to the Korean market. That's what we found as a pain point. That's why we are doing this based on our continuous research, setting up the corporate strategy, then do the actual execution. So some of the portfolio companies of ours are DYDX, Human Protocol, Ocean Protocol, like zkLAN, Kledos, and etc. So we are mainly focusing on working with the infrastructure itself or infrastructural players, because as I said, this is what Ethereum is all about. And that's the core of this crypto market for now. So we're bridging Web 2 startups to Web 3. We're starting from the bottom up. From the experience, what I felt, building Kepler Wallet with the great team and doing all the liquid staking protocol, what we felt is it's really hard to start from the bottom. 0 to 1 is hard, really hard. It's not only about your vision, but also how to implement it, but also how to operate the company. There are so many things to consider. Even me as a founder, it's hard. So that, what I experienced fully with my heart, wholeheartedly, I want to help, I wanted to personally help out these companies, founders, coming up from bottom up. That's what we do as a company. Web 2 to Web 3 expansion. So Web 2, we do the networking obviously, and to Web 3, based on all these business intelligence and market intelligence that we could have, we're setting up the corporate strategy, doing the BD, and later on, execution side, like PR, branding, even crypto marketing, because we need to target the different demographics altogether if we want to expand properly. So, yeah, this is pretty much about the overall Korean market's current situation, how it moved, what's the history of it, and what these kind of like key players are doing in the market. So if you have any questions, just ask me personally, or ask Erika, or whom, yeah, so that we can actually have a talk and give you a clearer vision of how this Korean, including the APAC market, works. Thank you.